Welcome back. You're still with us on Startup Street. Now, after filing papers to launch an IPO, the founder of Sula Vineyards, Rajiv Samant, says the company can grow at 20% annually. In a conversation with my colleague Yash Jain, he also added that the free trade agreement between India and Australia will lead to a significant cut in import tariff, but it will not impact Sula's business. Take a look.
We must remember that, of course, we had a pandemic, so all these numbers that you talk about are very much pandemic affected numbers. One of the things I should say is during that pandemic, we really thought hard about what our focus should be. So we changed our priorities, refocused, pivoted towards our own wines, produced the grapes grown here in India and the wine made in India, and that too, our premium wines. That was a huge change in our focus. We used to have a pretty big imports business. We really pared that down, so many supply chain issues, et cetera, et cetera. We also had invested in a distributor and we hived off that stake. So what the figures don't show is that those businesses were hived off. If you take our standalone own wine business, the growth is much higher than the number you've referred to. And now moving forward, that's the way, that's going to be the base, is going to be our standalone wine business. That's really what Sula is about today.
Okay, how much is the sort of revenue growth rate on the standalone business, as you say?
So in the past year, the revenue growth rate was in strong double digits, over 20%.
Okay.
I don't want to comment on what's going to come in the future because that's we're going to just talk about the DRHP today.
Correct.
But for the industry as a whole, if you look at the industry report, the Technopack report, which is also excerpts of it are in the DRHP, it's forecasting extremely strong growth ahead. And of course, Sula, being the market leader, is the best poised to take advantage of that growth.
Correct. So, I mean, fair to assume not, narrowing down to a number, but upwards of 20% growth on the revenue side is what the company expects.
It's fair to assume. I'm not going to say that that's exactly what we are putting out there, but I would not refute your assumption.
Okay. As far as profitability is concerned, just correct me if I'm wrong, because I have the figures for the previous 3 years. You turned profitable in FY21 with over 3 crore profit. In FY22, your profit grew 16 times. Now, what I want to understand is what led to this strong growth on the bottom line. And 16 times, I assume, wouldn't be a sustainable growth rate for a company. What is that what is it that investors have in store when it comes to the profitability growth that you would guide them?
See, you've really picked out a couple of, startling stats here. It should be pointed out that the base year that you're talking about was a pandemic year. As you're aware, India was one of 2 countries in the world, along with South Africa, where the government decided to stop all Alcobev sales for around 3 months. Obviously, that hit our business pretty hard. So you can't exactly take that year as the right comparative. If you take a look further back in history, actually we had strong profits. We've always been a strong, profitable company. Since year 1, I would say that 90% of our years we've been profitable and showing growing profitability. You're absolutely right that no company can deliver 16x growth in profits and do that again, but we do see some good profit growth ahead.
India is very close to signing this FTA agreement with Australia. Australia has a large wine industry of itself. They've been asking for reduction and significant reduction of tariffs when it comes to import or for them export of wines to India. Would this make the Indian industry very, very competitive for a homegrown player like Sula?
So we must remember that the early harvest agreement that you're referring to has already been signed. Now it needs to be ratified. So we're moving towards the Australian Parliament should ratify it in the next couple of months. In this agreement, yes, duties are going to come down significantly for expensive imports, which right now, just to put it in perspective, is less than 5% of Australian imports that it's going to come down. That's really going to expand the wine market at a much more expensive level. At this point, none of our wines is competing directly with these wines on which these tariffs are going to come down. So I don't see a big impact on Sula.
What is the duty that currently exists on imports of wines from Australia or any other country in that sense? And with this FTA with the Australian counterpart, how much do the duties, what is the say in terms of the duties coming down?
So the main impact of this is going to be on wines that cost USD 15 and above per bottle on a CIF basis. So just to understand that, these are wines that typically to the Indian consumer are going to cost 4,000 rupees plus 3.5. So very expensive wines. On these wines, yes, there's going to be a significant reduction from the current around 150% to down around 50%.
Australia is not a concern at this moment for you, but once this entire agreement process starts, India could be looking at more countries. I think one of the countries that again it's looking at is UK. There could be more countries which could be, in the fray for this particular agreement. Possibility that there could be some wines where the FTA would impact the range of wines which could be lower. Does that become a potential threat?
So the Australia FTA, the Early Harvest Agreement, has set a precedent that we are very comfortable with, where we've reached at this point.
Correct.
If that precedent is followed, we are not, of course, we are always going to be aware, alert, but we're not terribly concerned with what might happen if the same thing happens. For us, it's the EU, which is the main one. UK, as you're aware, is mainly spirits.
Correct.
So UK is really, what we're talking about is whiskey and others, and mainly Scotch whiskey is the thing. In terms of EU, that's really where a lot of the wines come from.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.